In this video, I share my analysis of gold and where I expect it to be moving this week. I'll also share a trade I was able to take advantage of this morning when the setup was there in the market. You could also use the same analysis and look out for more buy opportunities as and when they present themselves in the market today. Remember to subscribe, like and share the video as well so we can pass on value to a wider Forex community. Let's go to the chart. So we'll do a quick gold analysis to see where we expect price to be headed for the week. This is gold and we are on the monthly time frame. What we see is price moved impulsively to the upside, and during this impulsive move, price broke and closed above this resistance area. It created a minor resistance area in the process around here with a bullish followed by a bearish candle closures before finally breaking through to the upside. Now, what do we see currently? What we see currently with this candle is price opened the candle here, moved up to this area here before finally dropping and closing around here. This candle formation gives us lots of information within it. Now, much as it closed with a long wick to the upside, it still closed bullish. It has a bullish close. Now, once we add on this long wick to the upside, it indicates to us that this is not necessarily a rejection wick, but rather a wick to fill. And so we would expect price to fill this wick to the upside. That indicates to us that price is bullish. The structure of the market from the monthly perspective is bullish. So we'll drop down to the weekly and see if it gives us the same perspective. Now, this is a weekly chart and we see that price broke this support, this resistance area to the upside, created some kind of minor resistance here, which it broke above with this impulsive move to the, and now we see it's dropping a little bit and retracing part of this bullish move to the upside with this simple retracement. Like we have seen on the monthly, it is not necessarily a reversal, but rather a simple retracement on the basis of monthly time frame perspective. Now, if we take our Fibonacci tool and measure the amount of retracement, and we do that by measuring from the low to the high of the impulsive move, what we see is that price dropped and is testing the 50% retracement area and oscillating between the 61 and the 38% retracement levels. If you understand anything about the Fibonacci retracement areas or levels, it's important to note that these usually act as a magnet for price to come to, and once it is within these levels act as a support or resistance area. Now, what we see now at this moment is that it is touched the 38 and the 50% retracement levels, but it was able to prick below the 50% retracement area, though it did quite reach the golden ratio of 61% retracement level. Now, what happens after an impulsive move such as this? Well, we expect a retracement, and price did just exactly that. Retraced to this area that we have marked out from the Fibonacci levels. Now, after the retracement, what do we expect from price? We expect another impulsive move to the upside to complete the impulse retracement impulse move. So coming to the daily, we see that price tested this support area here and it was rejected to the upside. Now, you see price first closed below this support area before finally closing back above and then retracing to retest it, and we see right now with this candle here it is bouncing off. Now, this drop and close below was just perhaps the big players in the market looking to liquidate early sellers in the market before they could move price back up to the direction that they intended to move. And currently what we see is price is breaking above this resistance area. We could see it reach this other resistance area, and once that happens, perhaps we could see a drop. Once it moves to this area, we could see a drop back into this area before a further move to the upside to fill the wick that we have seen on the monthly time frame. And this is the wick that I'm referring to, that we expect price to fill during this move to the upside. By and large, price is majorly bullish, and we could see further bullish movements within this market. Now, what we could do, dropping down to the 4-hour time frame, is to look for bullish setups to drive with this market to the upside. If you see closely here, we see that price has broken so far this area of resistance to the upside, and it is trending above. What we will do is to look to drop further down to the lower time frames and look for bullish setups that match our analysis, which is bullish, because remember, we have looked at the monthly, the weekly, and the daily, and these are directional time frames, and they all indicating bullish moves coming into the market. Now, what we'll do is to prepare ourselves in the lower time frames to take advantage of the moves as and when they come to us, but we'll be waiting for setups. Already, there was a setup that we had this morning that I took advantage of, which I will show you right now. So this is the 30 minutes time frame, and this is the setup that I have taken, a buy trade in the gold commodity. We will wait to see how it plays out. I'll be updating you and then let you know when it does. If it comes to the drawdown and closes us out, we will know that. If it continues to RTP, we will see that as well. I hope you found value. Kindly remember to subscribe, like, and share as well, so I can bring you more great content and value on the channel.